Hello, I'm Greg Hunter. Welcome to USAWatchdog.com. We have back our reoccurring market expert, our trader, our former Bear Stearns trader, Gregory Mannarino. Hey, Greg, good to have you here.
It's great to be here, Greg. Thank you so much for having me back.
Now, of course, you have your really popular YouTube channel with almost 2 million views on it. Also, you started a new website, which we'll talk about at the end, called traderschoice.net, where you get a little deeper dive in and give people, more market calls, picks, stock picks. And we'll talk about that at the end.
Yes.
All right, well, the first thing I want to start off with is the downgrade of UK debt. They lost their top rating, which I don't know when, if ever, that's ever happened. And the basic reporting here in the U.S. is like, what? What's that mean? I mean, nothing in the papers, nothing on the channels, all the stuff about sequestrations on the channels. But let's start with this UK debt downgrade. In your mind, in traders' terms, what does that mean?
Okay. What I think is going on here, Greg, is something I've been talking about for the past several weeks. In fact, I've done videos about it. I believe that the United States debt will be downgraded imminently. That was a fired salvo meant for the United States. They're showing us, hey, guys, look at what we're going to do here to the UK. We're a lot worse off here than the UK. You know that. Your readers know that. Your followers know that. So this is a warning for what is coming here now. For traders, we should be short here. Short the markets. I've been talking about this in my blogs recently. As a matter of fact, on my new website too, traderschoice.net. I have picks there. Most of it is all designed for a market that's going to roll over, in my opinion, at this time. And that's what I think is happening at this moment. This is just a warning shot for the United States. And it's pretty evident to me that's what's going on.
And so it looks to me that this downgrade is going to play in with, this whole sequestration, where I think the best thing that could happen is if we get the $85 billion in cuts this year. But, what do I know? They're making out like the sky is falling. And the president had a special press conference with, the White House press corps where they had sat down and he was talking about how, we need to cut things in a smart way and, we need to, close some loopholes. Okay, I get this. The Democrats do not want to cut. The Republicans said, hey, you got your tax increases. Now we have some cuts. But the question that was begging to be asked by the reporter spinmeisters is, okay, so you want to cut things that we don't need. Okay, give us one cut. What would you cut, Mr. President? And that's not gotcha journalism either. You're talking about cuts. We keep hearing about cutting things in a smart way. Okay, just give us one. And they don't want to cut anything. And I think they want this thing to I don't know, implode or have hardship on the American people so they can gain traction in 2014 in the midterm elections against the Republicans.
That's part of it, but there's a lot more going on here in a very sinister way. Let me just go over some of the things that you just said here. We're talking about $85 billion in a almost $3.5 trillion budget. It's unbelievable that they're making such a big deal about this. It's a fraction, and if we cannot cut that, we're just dead in the water. So it just plays into everything that we've been talking about. Is this system is designed solely around the acquisition of debt in perpetuity, and it can't stop in any way. That's just why they're so desperate. If we admit we can't take on any more debt, we have a crisis. Let me just show you something.
That's a good point. They admit they can't take on any more debt. Oops, they're maxed out. We're maxed out. That's what the world would say. America's maxed out. They're not going to grow.
Exactly.
Sell.
Yeah, well, there's a lot of problems here. I think either way, whether the sequester doesn't kick in or it does kick in, I believe it's going to. A debt downgrade is coming, and the market is not going to respond well to no matter what happens as we go forward. Now, let me just show you this real quick for you and for your readers. Let's check this out. This is this is the 30-year bond here, and you hear a lot of people talking about there's a bubble in debt. I'm screaming from rooftops about it.
The 10 years at 2%.
You have Bill Gross coming out talking about the debt supernova. Let's look at a particular pattern here and a couple of other things that are going on. This is the 30-year bond Okay, now this is a clear, look at this pattern here. All right, now I want you to just remember that for just a moment. This is a clear bubble pattern. Now, I want to come back to this in just a moment. Just so your followers can check this out. This is the Dow Jones Industrial Average just prior to the crash of 2008. Look at this pattern. Okay, it's a bubble. Bubble, bam. Same thing. Okay, bubble.
That's the bond prices increasingly, interest rates going down and bond prices going up. Bond values going up, interest rates going down. Boom, so you have this crescendo.
Yeah. Look at this. Look at the volume. Who's buying all this, Greg? That's the Federal Reserve. This is normal activity, normal volume. Okay, this is from 2003, just prior to the crash. All of a sudden, look at that. Is that unbelievable?
Wow.
Okay, that's the bubble being created by the Federal Reserve. It is absolutely staggering and absolutely dangerous. Now,
and wait, let me insert one thing. If the Federal Reserve wasn't buying the debt, they'd have to put the debt out there, and people would take bids, and 10-year wouldn't be 2%, it'd be 6% or 7%, or much higher than it is, and that would drive up borrowing costs and force Congress to cut back. They couldn't afford it. Am I right?
Yes. I would think what people need to realize here is the United States is already in technical default regarding its debt. Because if it were not for the Fed buying all this, we'd be in actual default, which is coming. And that's the scary part. All of this debt is putting pressure on the dollar. It can't recover. Just to refresh your memory, that's the dollar index. That's what it's doing. This is going back 2003. It's pretty disgusting. But honestly, I think this is what people don't understand. This is it. The story of our lifetimes, and what I'm talking about is the debt. The global debt is in a bubble. The United States debt is in the biggest bubble of them all. And we understand we're seeing debt downgrades. Moody's and all these rating agencies, they understand that if they don't come out and start telling people the truth, well, this whole thing going back to the crash of 2008 with the mortgage-backed securities, which they rated AAA, that was a whole other thing. And I think that the rating agencies...
Some people call that fraudulent, that they rated stuff, and S&P is being sued, which I think I'm not trying to, help out the S&P here, but they are hardly the only player, the only bad actor in the debacle that we face. Just S&P caused the whole thing, please.
Of course. So what I think is going on here with the rating agencies, now we know what happened with the UK, is they have to, in a way, I guess, kind of come clean, if you want to put it that way, and say, look, we know what's going on here. We understand this, and we're going to start getting with the program. People are going to get destroyed here, Greg, destroyed from a financial standpoint and other things.
Because, and just so you understand, so people understand, our home gamers, as Kramer would say, that when interest rates rise, and they're going to, the values of those bonds are going to be crushed. They're going to get cut by 10, 20, 30, 50, 80. I mean, who knows how much of a hit they're going to take. Depends on how high rates go, but they're going to be eviscerated.
That is going to happen. And what is that going to do? That is going to put enormous pressure on equities, which this reinflated bubble, due to the Fed's action, is going to slaughter stocks across the board. And that's what's coming down here, down the pike here. This is an inflated market, grossly overvalued, based against unemployment, and all kinds of things, and GDP. You understand that.
To your point, insiders are selling massively.
Insiders are selling big time. Of course they are. I'm short the market right now, and I'm not the only one. Believe me. Going back to traders, all my friends who are traders right now are short the market. I don't know anyone who's long, and anyone who is long right now, I don't know. Maybe they should reevaluate things a little bit. Now, you have to consider other things as well that are going on here. What are we starting to see, Greg? We're starting to see inflation. I think this is something we were talking about earlier. Is the mainstream media outlets are saying, hey, what's going on here with gasoline prices? They've been rising so fast, so rapidly. They're spinning it every which way. It's unbelievable. This is inflation. All right, too many dollars chasing too few goods. Economics 101. They're not talking about how groceries are going up and they're shrinking in size. So there's no mystery here. We're starting to see inflation. And honestly, this is the scary part, Greg. We're just starting to see inflation. I would be willing to bet just from the initial QEs. We haven't even begun to see it from anything that's been more recent, and we won't for a while because there's a lag time here. It takes a while for those printed dollars to make their way to the consumer side of the monetary base, and you get, boom, inflation.
Well, the Democrats don't want any cuts, okay? And nobody says, so we're going to print $85 billion a month forever. I mean, I want to keep coming back to this $85 billion a month. This is an overt action. This is not some secret thing or something that I had to do some computation for. This is what the Fed's open-ended policy is all about. $40 billion for mortgage-backed securities, $45 billion for buying government bonds. To your chart, you see this big, amplification of buying the Fed. And so, I asked to Ira Harris, he's a legendary trader. I said, well, what would happen if they, stopped, buying, $85 billion a month? If they stopped the $85 billion a month? Well, they're not going to do that. I said, I didn't ask you whether they're not going to do it. I said, what would happen if they did? Well, there'd be a big market correction. Well, that's putting it nicely. The whole thing would melt down in a week. So we're printing $85 billion a month to keep the economy from imploding. Period.
That's
the end. Are we not?
Up. Absolutely. It's going up, too. Because let's think about this. When
they're going to print more than $85 billion a month.
Oh, there's going to be much more than that. Because when the debt downgrade comes, who's going to make up the difference? The Fed's going to have to step in, print more to keep the interest rates lower. This is a very dangerous game that the Fed is playing. It is very scary. They're creating a greater and greater imbalance between the supply and demand for the U.S. dollar. Speaking of which, we know the U.S. dollar is losing its reserve status. You got the Chinese now talking with the Bank of England about currency swaps. I mean, the yuan is going to be the world's reserve, Greg. We know this. If people don't get hip to that and start positioning themselves for this, they're in for a rude awakening in a very short time. We also understand that the Chinese are acquiring gold in mass, taking advantage of these ridiculously manipulated prices.
They bought 25% of the mine production last year is what I read in one report. 25% of the mine production. That's just the mine production. I didn't count what they're buying from the MFF, the IMF, or, taking delivery of the LBMA or taking delivery at COMEX. I didn't count that.
Yeah, and in 2 to 3 years, this is estimates, they will overtake the United States with regard to their gold holdings. So you can see the writing on the wall. People really got to start getting it with the program here and understand that everything people like you and me and all of us have been talking about is coming to pass right before our eyes. I hope people wake up.
You think it unwinds in 2013?
I think this is going to be a very interesting year. I think it's going to get very interesting over the next couple of months. And let's see how this plays out with regard to everything. It's starting to really hit a critical mass. I really hope that people are starting to think along these lines, that they need to get away from fiat currency. That is the number one rule here. Currency is dying, Greg. That's a fact. And a new move to a new monetary system is already in the works here. China is going to take over, period. The run and the reign of the United States as the reserve currency and as the global economic power it's over.
Unless there's war.
War is coming too. There's no doubt about it. I mean, the United States will defend its petrodollar. It has many times in the past, and it will again. Social unrest here in the United States, we're starting to see it pick up here with the increasing violence. This is just the beginning. Inflation is starting to kick in. This is just the beginning. This is everything that we've been talking about all coming to a head now, Greg. It's very scary.
Your website, traderschoice.net, and tell me a little bit about that. You're going to be offering trades, specific trades on stocks, and I know there's big disclaimers and that you're on your own, that you could lose money, that there's a problem, and I'm not a trader. I don't tell people to trade, but I don't know how to do it, really. But tell me about traderschoice.net. You're going to charge something for this, or how's it going to work?
It's absolutely free, Greg. People, and there's no passwords, there's no sign-ups. I mean, it's literally just there. I want people to take advantage of that site here. I'm going to have 2 lists there. a long list and a short list, meaning, stocks or ETFs that I think are going to rise. And on the short list will be those that I believe are going to fall. And I really think this is a resource that people are going to appreciate. Again, it's absolutely free. It's going to be funded by donations. Basically, that's it. And I'm only asking people to donate if they find it a viable resource and if they're making money. So it's based on performance. And I really think it's important right now, especially because I'm trying, just like you, trying to get more people on the right side of this equation, let them understand what's going on, because we can all come out of this winners.
Or at least in a better position than we were.
Exactly, yeah. But, the main thing is acquire metals, period. Get away from the fiat, get away from this debt-based economic model, which is going to be reformed as we speak. It's being reformed.
And are you worried about brokerages? Are you telling people, okay, make your trades, and when you make some money, take the money off the table, sweep it out? Is that what you're telling people to do?
Well, that's what I do. That's what I like people to do. I do my trades, I make my cash here, and I turn it into real assets. Gold, silver, I'm also buying palladium. As a future play. I think that's a nice long-term play, because at one point this whole thing is going to turn around, and I think certain industrial metals are going to more than likely become more in demand as we move forward.
Gregory Mannarino uses a really important YouTube site, Gregory Mannarino on YouTube. Also, traderschoice.net. Best of luck to you with giving those trades and getting donations for people who are winners. Thank you very much, Gregory, for coming on USAWatchdog.com.
Thank you, Greg, very much.